Hey everyone, and welcome to Earnings Cheat Sheet for Friday, November 22nd. It's Alexis Garcia and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. And Ed, it is a little bit of a lighter week because of the Thanksgiving holiday, but we've got a little bit of an amuse-bouche of earnings previews for you. So what's on the menu?
We do have CrowdStrike, we have Burlington Stores, and Dell Technologies.
All right. And I really appreciate before the show that you recognized I was wearing my finest black leather in honor of NVIDIA earnings, which are now behind us. We can all move on with our lives. But let's start with CrowdStrike, which is scheduled to report Q3 earnings on Tuesday, November 26th. Earnings are expected to fall 1% to 81 cents per share, but revenue is seen climbing 25% to $983 million. And here's why we're watching CrowdStrike. We'll be interested to see what kind of discounts CrowdStrike is giving customers as contract renewals come up. And we'll also want to see if any big new customers are announced. So, Ed, CrowdStrike is still kind of dealing with the aftermath of the botched software update from this summer. But it seems like things may be turning a corner. Got several upgrades ahead of earnings, and still trying to make a comeback here. So, what's your thoughts with CrowdStrike ahead of earnings?
Yeah, that seems to be the assumption of the analysts giving upgrades. Normally, we don't think too much of it, and maybe it will turn out to be nothing, but they're probably getting hints from channel checks and others that CrowdStrike is turning around, but we don't know. So we want to see. So these earnings will be what they are, but it really is going to be that guidance, that sense, not just the guidance for the next quarter, but that sense of, are the customers staying? Are they getting new customers? Are they doing those discounts? Get a sense of this because this was one of the really big winners of the rally from like late 2023 on to mid-year, and it really was just sold off on that global outage. But so I mean, the numbers are going to struggle for a little bit probably, but yeah, that's really going to be important, and it's also important for others, for the whole cybersecurity industry. If they lose, if CrowdStrike is losing, is somebody else winning out? There's definitely some rivals that probably have been trying to pick at CrowdStrike's carcass, and CrowdStrike is saying, we're not dead yet, we're coming back. So yeah, it's going to be that earnings call will be very interesting.
Right, it's a little bit of a call the ambulance, but not for me. But let's take a look at the chart, Ed, because as you mentioned, we can see CrowdStrike hit those highs around 398 earlier in the summer, and then just completely fell off when that outage happened. But it's been slowly coming back. It broke out of this irregular cup here in early November, and it's now out of a buy zone. But what are your thoughts on the technical action?
Yeah, it's been pretty strong technical action recently. There's been was, after that massive selling, there's been some positive days in volume. A lot of the volume has been down, but have to keep in mind the volume was so heavy that that's making a lot of the days look light. It's not like the volume's been extremely light. So it seems like there's been more blue bars. The AD rating is a B, which tells you that there's been some decent buying by institutions. It is extended from that buy point, you could argue, especially if it pulled back for these next few days. Maybe you could treat what's happening right now as sort of an alternate handle, right in there, sort of was trying to peak out above that today on this day. You could sort of use that, I suppose, and it's higher up in the base because this handle, the official handle was pretty low in the base. It was above the midpoint, but it wasn't way up there. So on earnings, I suppose you could use that. It definitely could be an add-on buy point for those who did already have shares. But it could be that you just miss out on this. It could be that this one you have to wait on either for it to set up again. But definitely very important for not just CrowdStrike, but for the cybersecurity industry.
Right, and just looking at some of the fundamentals here, we can see growth slowing, but will be interesting to see what they have to say in terms of any new customers signing up on the earnings call. But let's go ahead and take a look at the next name, which is Dell Networks. That company is also scheduled to report Q3 earnings on Tuesday, November 26th. Earnings are expected to rise 10% to 207 per share, and revenue is expected to climb 9.5% to $24.66 billion. And here's why we're watching Dell. Data center hardware sales will be the main focus area And analysts will look for signs that Dell is taking market share from Supermicro during all its problems. So, Ed, talk to me a little bit about that because, again, this is another one. We've had some analysts kind of upgrading their outlook here. Um, it seems like Dell not only is benefiting maybe from some robust demand for these data centers, but they also got a lot of free cash flow and really benefiting from the recovery of the PC market here. So what's on your radar with Dell?
Yeah, I mean, because Dell is a very big hardware name, whereas Supermicro does these AI data center servers. Dell does that, but it also does PC sales. It also does a lot of storage. It's a pretty big name out there. So there is all of that. Supermicro's woes might be there. Blackwell chip. I think a lot of people are expecting the Blackwell chip is going to spur a whole new wave of demand, and it's not like the demand's ever been slacking off. There's still huge demand for NVIDIA's existing or older tech. But there still should be doing well there. Earnings and sales growth and earnings growth are sort of picking up a little bit. It's not massive. It's not seeing like some of these other names, but it's solid growth that it's been churning out. It'll be interesting not only with Supermicro, but NetApp reported earnings today, and that competes in the data storage, and so the data storage market is still doing well. So a lot of the markets are doing well for Dell.
All right, well, let's take a look at the chart because this one up almost 80% this year. As you mentioned, that growth kind of picking up here over the last couple quarters. We had that golden cross back here in late October where the 50-day line came above that 200-day line. But talk to me more about the technical action and how you're looking at this one to set up.
I mean, technically, this is a consolidation, though, really deep. And the last two earnings reports haven't gone well. I mean, the first one, big sell-off from near the highs a couple of quarters ago, and then it tried to recover, but it never really did. So ultimately, it fell about 50% from the peak in a very short time. It's come back, but that's something to keep in mind. And the last earnings report wasn't great either. It sold off pretty hard. So keep that in mind. Now, you can look at this as what the last few days, couple weeks, is a handle that is above the midpoint of the base, but the base is very deep and it's not that deep of a handle. I probably would like more of a shakeout. I mean, anybody who held on during that 50% drop probably wouldn't be shaken out too much here. And people who bought on the rebound, why would you sell per se? I mean, but it'd be great if there was more of a shakeout, not much time for that. So I don't think that's really going to happen. It seems like, but that is something that you could buy if it moves out from there. But obviously, this is a stock, despite seemingly having sort of modest but steady earnings growth, it has some big stock moves, and so you can't just set it and forget it with this name.
All right, well, let's take a look at the next name on our list, which is Burlington Holdings, which reports earnings on Tuesday, November 26th. A specialty discount retailer is expected to see Q3 earnings rise 58% to 155 per share, and analysts expect revenue to climb 12% to $2.554 billion. And here's why we're watching Burlington. We'll want to see if this specialty discounter is finding the sweet spot with picky consumers, Ed. And last quarter, Burlington posted a major earnings beat and hiked its outlook for the year. Talk to me a little bit about the context here, because we've seen some retailers report some of it good, some of it not so good. So, what's on your radar with Burlington?
Yeah, it's been real hit or miss on some names. I mean, Walmart, big winner. Target, big loser. Those are more big box. BJ's big box, which is a sort of Costco rival, big gain. However, what we're seeing now is TJX reported earlier this week, and that was okay. It was sort of okay numbers. And Raw Stores, which has been more of a laggard, that also had sort of okay results. But because the stock hasn't been doing so well, the stock seems to be bouncing, even though it was sort of mixed, even more mixed. But Burlington is in that same field with TJX and Ross, these off-price retailers, where you can get brands for like 30-40% off, like so they're brand names from other stores. So this one's shown some real strong earnings growth. The sales growth has been strong. They've just done a really good job in that regard. But yeah, we don't know because consumers are tricky. Consumers are willing to spend, but they're not spending everywhere. Even among the discounters. So have to see how Burlington does, and it'd be nice to see because this has been a strong performer over the past year.
Right. And as you mentioned, we're taking a look at the daily chart here, officially in a flat base with a 282.49 buy point. It's been building up that right side. Uh, but as you mentioned, solid earnings and sales and, potentially working up to a breakout here.
Yeah, and you could probably treat this as almost as a cup with handle. It has sort of a shallow cup feel to it. I mean, it's a little rounded, but in any case, you could treat this as either as a handle or as an alternate entry within there. Not that it's that much of a savings, but still just to get started in there. Again, if it moves on earnings, and we'll just have to see because this can gap up. It's had some good reports. It's had some bad ones, and it follows the other name. So people won't be looking for a surprise, but they very well may be.
Well, as you always say, Ed, so important to follow related companies within the stocks that you're watching. And thanks so much for your insights today. That wraps it up for this episode of Earnings Cheat Sheet. If you want even more market analysis, tune in to Stock Market Today with Alyssa Corum. That goes live after the closing bell. And we'll see you right back here next week.